What's up everyone, it's Scotty with MoneyVest. So in today's video, I wanted to break down CrowdStrike's earnings here because the company reported some fantastic numbers and of course surged on the news, and now it's starting to roll over a little bit. So I wanted to break this company down, go over the fundamentals, go over the technical analysis. Of course, CrowdStrike, including a lot of cybersecurity stocks, has seen a massive rally in 2023, not to mention so far in 2024. Also, a lot of these stocks are up on the year. And CrowdStrike, since actually January of 2023, the stock is up over 200%. So, of course, has seen massive gains. So, congratulations to everyone who's been investing and trading in cybersecurity. It's been by far one of the best investment themes to be investing in my personal opinion, and has lots of room for more potential upside in the future. So as always, if you enjoy this video, find it helpful, make sure that you drop a like. I would really appreciate that. And of course, subscribe to the channel if you haven't already. The links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course, getting access to all the members-only private videos, including all the trade alerts and trade ideas and options alerts. Everything is going to be available with the link down below. We'd love to have you on board. And again, if you have any questions whatsoever, feel free to reach out, and also do connect with me on Instagram. My handle is going to be CastWRP, and more importantly, we have our very own MoneyVest.com website coming out very soon with tons of amazing features, fundamental and macro analysis with full comprehensive analysis. We've got so many ideas that we're going to put to work and we're going to bring to reality that you are going to literally have perfect analysis when it comes to individual stocks and invest with confidence. So links going to be down below. Would love to have you on board. So first things first, earnings per share came in at 95 cents per share for CrowdStrike versus 82 cents per share. That was expected. Revenue coming in just over $845 million versus $839 million expected. So strong beats on both revenue and EPS. And then now reported the very important GAAP net income for the first time for the past 4 quarters. CFO Bert Bodbeer said in the earnings release, full year revenue rose 36% year over year from 2.24 to over $3 billion as well. And the company also announced that it would acquire Flow Security for an undisclosed price in a cash and stock deal slated to close in the company's fiscal first quarter. And the company has been stepping up its merger and acquisition activity in recent months as well. And the company also guided for the fiscal first quarter revenue between $902 million to $906 million, better than the expectations of $899 million, and also expects earnings per share for the period in the first quarter fiscal 2024 between 89 cents to 90 cents per share, better than what the company was expecting, consensus expectations of 82 cents per share. So we got a revenue beat, we got an earnings beat, we've got a guidance beat, and Podbeer also reiterated the company's focus on achieving $10 billion in annual recurring revenue by the year 2030. The company reached $3.4 billion in annual recurring revenue in January. So we've got a company that has the potential to more than 2x in the revenue over the next 6 years, right? So if you do the math, 10 divided by 3.4, we're looking at a number which is going to be 2.9, to almost 3 times the revenue number, annual recurring revenue of almost 3 times in the next 6 years for the company. That's where the potential is, because if the company can become profitable, generating some very solid margins and cash flows at $3.4 billion, just imagine what that operating leverage is going to do for the company once they're able to achieve over $10 billion in actual annual recurring revenue. This right here is the overall addressable market here, market opportunity of over $100 billion in TAM as of fiscal year 2024. The AI native security platform, again, lightweight, cloud first, AI native. So they're kind of removing all the hardware, data silos, and friction. And again, if you kind of go through the entire presentation, there's a lot to break down. Again, growth at scale here, subscription revenue. I mean, this is one of those companies that we've been talking about for quite some time. I've actually traded this stock multiple times in the past. And this right here is the entire guidance for fiscal year 2025, where they're expecting revenues between 3.9 and 3.98. So almost $4 billion in revenue, with a non-GAAP net income of $940 to $989 million, with a non-GAAP EPS between $3.77 and $3.97. So almost $4 per share. And right now the stock, of course, is trading at all-time highs, pretty much at just over $320 per share. So if you do the math, 320 divided by 4, we're looking at a forward price earnings multiple of 80. And 80 is actually, in my opinion, quite high. But if you take a look at the earnings per share for the company, so if you come back 95 cents, 82 cents, 74 cents, 57 cents, and then 47 cents here reported, and again 40 cents. So if you come back to the profitability grid, they have been profitable on a quarter-over-quarter basis, but this right here, the entire fiscal year 2023 and of course 2024 was the first couple of years that they've actually reported some profitable numbers. So if you come over, take a look at some statements, income statement on an annual basis, come down on a 2023 earnings per share, looking at 37 cents, and that's expected to of course grow very, very nicely to over $3 a share in 2023. 2024 is going to be almost at $4 per share, as they've already pointed out in their earnings expectations, in their guidance for fiscal year 2025 for them, but calendar year 2024. So when it comes to CrowdStrike's potential investment opportunity here, the balance sheet, we don't have to go over that because the company's got excellent balance sheet with more cash than debt on the balance sheet, with very strong current and quick ratios. So if you come down, current ratio sitting at 1.67. They've got very, very low debt to free cash flow, net debt to EBITDA numbers. So balance sheets fantastic. The problem also does lie in terms of share dilution. So if you come over to statistics, take a look at it on an annual basis. We do have an increasing share dilution here. However, it's been more stable over the last 4, maybe 5 quarters. So that also is starting to go away a little bit. And if you come over, let's just quickly plug in some numbers here on the earnings model. So 2025 earnings of $4, and we're expecting, let's say, 2027 expectations of $8.32. We can even account for, let's say, a little bit of a higher number. So if you come over to statements, and if we do income statement here, we do revenue, and then also do net income over here. So we're looking at $90 million of net income, but on a non-GAAP basis, they're expected to do net income of just a little bit over $989 million. So if you do the math here, 989 divided by, that's going to be 3989. So let's just do what the margin's going to be, about 25% margins. So 25% margins here is what we're working with. And on $10 billion, we're working with about $2.5 billion of actual net income, and $2.5 billion divided by, again, 250 million shares outstanding. There's a lot of mental math here. We're looking at almost $10 in earnings per share. So if you plug in $10 here by the year 2030, we're looking at a 20% CAGR. So 20% compounded annual growth rate for CrowdStrike. So if you come over to 5-year discounted earnings model, and if you plug in, let's say, 989 million for Crowd, and we're looking at, let's say, a 20% growth rate and giving them a multiple of, let's say, 30 times, 12% discount rate, 10% margin of safety, and 2% share dilution, we're looking at almost about $141 fair value, which obviously is significantly lower than where the price is trading at the moment at $320. And that's primarily because of the higher price earnings multiple. If I go up to 80 times, then of course we're undervalued by 18% because the fair value would jump to over $370 per share. So that is something to keep in mind. Now, if we do let's say a 7-year discounted earnings model on CrowdStrike, so same analysis, 989, we do about a 18% growth rate, about a 25 times P multiple, 2% share dilution, and of course 12% discount rate, 10% margin of safety. We're coming up to even lower fair value, $117, 20% growth rate, with, let's say, a 40 times P multiple, and now we're looking at just over $200 per share here for the company as well. Actually, this is updated, yes, so $13 per share by year 7, and that's going to bring us to a fair value of just over $209 per share. So that's going to be, again, 35% potential downside needed for CrowdStrike to make sense. So again, it really just comes down to valuation. Now, CrowdStrike is a fantastic business. I'm not denying the fact that CrowdStrike is amazing. It's just about the valuation and what you're comfortable paying. If you go over to 40 times multiple, 190. If you go to a 50 times multiple, 237. If you go to 60 times, we're looking at 284. So it just really depends on what multiple you're comfortable paying for this company. It's a fantastic business, no doubt. And this right here is the entire sort of technical analysis, where we have obviously seen a pretty significant rally. And of course, this right here was the lower highs and the lower lows for CrowdStrike. So consistently making lower highs here, and of course selling off quite aggressively, lower lows. And this right here, one single shot up all the way to new all-time highs for this company. So support level is going to stay put down to 291, and there's going to be another support sitting right over here at 244, 245. But of course, as we like to hunt for deals, the lower the better. technically very, very overbought. So I'd be super careful for this stock, for this company at the moment, considering how overbought this is at the moment on the weekly time frame. So let me know your thoughts down in the comment section below. That's why I do prefer CIBR a little bit more than individual stocks right now, because of the volatility, because of how much they have moved higher, because of the premium that they're trading at the moment. So CIBR support level is going to stay put at $54 per share, down to as low as $46, $47 for CIBR moving forward. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Also, do join our Patreon and our Discord if you want to access all the moneyvest.com benefits, including all of our website features that are going to be launching very soon. Do connect with me on Instagram as well. The handle is going to be CastWRP. And as always, happy investing. I'll see you all in the next video.